covering in the air is possible. First of all, the reason why short covering in the air is possible is because the stocks have dropped materially, meaning it isn't something that is created because the stocks are up. It is created because the stocks are down, and some people are actually gonna either cover their shorts or they just believe that the downside is minimal. So that's really all. So a lot of people, I'd say even the crypto community, have been waiting for a crash. And I think a lot of people are also prepared, seeing that high growth stocks have been falling since 2021 for many stocks. And since a lot of cryptocurrencies are considered early stage venture capital names that can fall 50 to 70%, I don't think anyone is surprised that this year cryptocurrencies could halve or perhaps go 70% off. And at the same time, you also see that a lot of companies in the traditional markets are entering the NFT and crypto markets. GameStop shares are surging 30% today because of a plan to enter the NFT crypto markets, aka it's going to do something like an open sea. It's also going to be something that everyone has seen for other companies. We've seen how Square, Coinbase, and nowadays I've seen Airbnb accept perhaps crypto payments. So a lot of companies, Visa, they've all been receptive, not just your Teslas, on accepting cryptocurrencies. And we'll probably see more and more mainstream adoption. Nonetheless, adoption mainstream doesn't mean that you wish to pay $1 trillion or $2 trillion or $3 trillion market cap for companies or cryptocurrencies or blockchains that are still in the early stage. So here's so there's also a lot of short covering in the air. You're seeing last night 20% up for Digital World. This is a SPAC that started at 10 and right now it's still trading at $60. So $50 to $60, there's already Secretary Gary Gensler. There's a lot of people like Whitney Tilson scaring people out that this Trump's back is probably going to go $10 or less. And yet, because of any news and the fact that it has very little float, you could see that Trump's back has held at $46 for quite a while. And the stock rises simply because of a news that the social media app, which is Truth Social, is going to target a launch date somewhere on Feb 2021. Feb 21, 2022. The stock jumps nearly 20%, and we could argue that it's jumping mainly as a short squeeze relief rally. Nonetheless, this is what's happened last night. EMC rallies 10%, GME rallies 30%, and you'll notice what I did. What I personally did is I bought the riskiest Cathy Wood names, aka these growth stocks that I believe has a leeway to pump about 10%. From the likes of Roblox, Affirm, Square, Zoom, Palantir, Unity. Yeah, I bought those. Yeah, those were the names I got. I bought it last night. I was short the market through sell calls, through puts. I closed all my sell calls. I closed all my shorts. And instead, I went long the market through shares and through call options. So you'll see I bought shares and call options. I'll explain. I also believe that in December, I was sharing my ideas for 2022. I said that, there's a bear market 2022, likely because November, the US already said that there will be higher interest rate hikes, and it's already assumed by the market the dollar will be strong. So for the Filipinos out there, yes, we do expect your dollar peso to trek around 51, 52, 55, 55 the most. So anyway, for this year, it's going to be 52, 50. And then for 2024 or 2023, around that level, you'd see it trek again to about 55. So you're expecting the dollar to raise rates, and therefore your dollars will increase against your Philippine peso. Obviously, the Philippine peso will also try to raise rates to stem the spur of money towards the dollar. But, chances are the Philippine sol is just copying. And anyway, here's the thing though. Despite all these rising interest rates, which really would benefit this year, obviously the dividend yield names, the banks, your energy, your utilities, I'd have to also say that there's one thing that people are exaggerating about. This 2022, people are exaggerating about the demise or the death of growth stocks. In my view, it's exaggerated. So, of course, you just have to choose or handpick which ones you like. And I personally said that it just so happens that Alibaba at about 100 to 120 is a name I chose. It's one of my selected growth names because it either trades at less than 10x forward earnings or even 2x forward earnings. Really depends on how much penalties Alibaba is going to get this year. And it's got $25 cash. Also, because it's difficult to ascertain because of their penalties left and right, I do not see dramatic upside. So everyone's asking how high would Alibaba go? Probably 140 bucks. But in my view, the reason I went long 110 to 120 was I don't think it goes $60. Sometimes it's just like that. Sometimes a thesis is if the downside is very minimal, and even if the upside is just like $30 higher or $40 higher, it's good enough simply because it acts like a cash. So that's really how I did it. Happy thing to note is that Alibaba rose about 8% year to date for this year, just on the last 4 trading days, because of Charlie Munger. So we've seen Charlie Munger deploy cost averaging on Alibaba for about more than 5 years, I believe. And at current levels, you can do the same price as him, even cheaper perhaps, because I think he also has high levels. So yeah, so far the market is seeing the resiliency. We've been sharing the resiliency of how Alibaba stayed afloat all throughout this entire week when the entire market was falling for the first 3 trading days. In the first 3 trading days, what really inspires this short covering in the air is because a lot of stocks already fell 20% in just 3 trading days. A lot of these are high growth names that we believe will also fall. Then again, because they fell a lot, there's ample room for short covering. So what we saw last night is short covering. And a few things to note, we are seeing all-time highs in Toyota Motors, and it's probably going to be in our all-time high. Generally, we just expect Toyota to rally 210 to 230, but that's still good given the lack of positions that really have, the market's really not liking traditional makers still. And this is one of the rarest charts that you will see as well. A chart breaking out to all-time highs, despite the fact that the entire market in US, a lot of EVs are actually more or less on the short side. Except if you're considering Tesla, Ford, General Motors, the US EVs are still strong. The traditional car makers and Toyota and Volkswagen and Daimler. So what we're seeing right now is traditional automakers have a lot of leeway to surprise on the upside. And a lot of the so-called concepts or new stocks like Lucid and Rivian and NeoXpen Li Auto have a lot to prove. So you've got tale of 2 cars, the traditional versus the current, the new ones. And what we're clearly seeing is that the market is only willing to buy a Tesla, and they're willing to only short every Lucid and Rivian out there, and we agree. Okay, so also we're seeing Toyota dethrowing GM. These were just the past few days of earnings reports, and so it made all-time highs. Toyota is actually selling at least 30% of their total 500,000 is electric vehicles. We're seeing actually traditional car makers able to give full self-driving. It's becoming a standard. So what you're seeing is that if electric cars are similar to smartphones or mobile phones, wherein everyone's going to have electric cars someday, what the market is simply seeing here is that, well then, if the market will have electric cars, then maybe my dad and your parents or we would either buy Teslas or traditional car makers. The viewpoint is also because all of these traditional car makers are not trading at lofty valuations. They're not getting $50, $100 billion out of thin air. Meaning, except for the fact that Lucid and Rivian trade at about $100 billion market caps and not yet delivering all those vehicles. As of yet, yes, they've got pre-market orders, but pre-orders is not similar to actually delivering those sales again ahead of time. Because what if they deliver it a year after or 2 years after? So you've got those sales being baked in, which isn't truly sales. So this year you'll see a lot of traditional car makers, in our view, to continue higher. So market already priced this in with Ford and GM, although we aren't gonna say that Ford and GM would likely fall, simply because if the market sees growth in the EVs, they see growth in the industry, it could be a tale of rising all boats. So there's that. A tale of rising boats means that if the traditional car makers aren't paid as $50 billion like NIO and stuff, then they have room to grow. That's what's happening. And perhaps what's going to happen is that NIO X Li Auto will deflate so as to narrow down the valuation extremes. It's also possible that Tesla will also deflate because it's a high growth stock, except that people consider Tesla as a FANG name, which is sort of impossible to short at 50% off, although we won't say that it's impossible. What we could see is 1, 2 could fall 600, but it could also be caught and catched by everyone every turn, every 1,000, every 900, 800, and so on. Now, because this year is likely to be a year where dividend yields is the most important, we'd say that 2022 is the year of China Mobile, aka 941 HK. We already saw 941 get eaten like pancakes on the IPO, up 5% after listing in Shanghai. So I do plan to tell everyone to just go long 46 to 50 areas, anywhere there, collect your 7% dividend annually. And so far, they have really stopped paving way for 5G for China. Technically speaking, you could check China Mobile, China Unicom, China Telecom. We just chose China Mobile because it's number one. Okay, so far, this is the crypto total market cap. We have been opining that $3 trillion market cap was the peak for now for your Bitcoin. And that's the coinciding high of Bitcoin at about $69,000. So far, we are seeing crypto markets do fall down. And so far, it deflated from 3 trillion to 2 trillion. So it already shed $1 trillion, or essentially about the same price as July, somewhere about August 2021. Now, in July, when Bitcoin fell to about 30,000, it was about $1.2 trillion. So if you're assuming that Bitcoin will rebound from $40,000, it is possible because that was a minor support around September and August. But I'd argue that if you're buying at about 2 trillion, you're supposed to just sell at about 2.4 trillion market cap. That means that buying Ethereum at about 3.1, 3.2 means that you're also selling at about 3.8. And also, if you're buying Bitcoin about 40,000, then you're supposed to also sell at 48K. Granted, even if it bounced, that is a lower high, and you can see that the downward trend is intact in the short term. In the short term, we're talking about 6 months. The downtrend is intact for your crypto markets. Of course, after you make huge gains, we can always see those drops are healthy corrections. So we'll probably see it. In my view, people are still waiting at this $1.2 trillion mark. And if it really goes bearish, then you got 800 billion or less than a trillion. We'll see whether we can break that. Let's wait for things to show us time. Time will tell. So this is your crypto market recap, $2 trillion. We still expect selling off. And even if it bounces, there will be more people shorting on the rallies. So relief rallies of Bitcoin, Ethereum, chances are below 50K and below $4,000, a 20% rebound, and then another clobbering down. So that's how it goes. And it's going to be almost the same with the rest of the coins, even if it's Binance, Solana, Cardano, and Ripple. So we've seen them already downtrend and it's intact. And when you saw that, we already opined last year that all these crypto miners will also fall. A lot of the crypto miners, crypto ETFs, and all of them, NFT-related ETFs would fall. And for this year, they've already fallen. Back 28%, Argo Blockchain 15%, Hot Mining 12%, Marathon, Silvergate, Bitfarms, and so on. We do think that a sell-off of at least 50% is possible. Therefore, rallies of cryptocurrencies from now till maybe next week is considered a relief rally. So what you want to do with the relief rally is to wait for it to rally and then to reinstate your short positions if you plan to do so. Chances are one of the best shorts would be Marathon and Riot and MicroStrategy and Bitfarms and Hot Mining. Really depends how high they will. Really depends how high they rally, and even the likes of Coinbase. Yes. So Silvergate, these have huge drops. Still overstocked, you can still sell it if it rallies to about $60. So it's just something for you to keep in mind, because 2022 is a year where a lot of early stage companies would get deflated. That means, yes, your metaverse tokens like Mana, Sandbox, Axie Infinity have a leeway to fall 50 to 80, 90% down this year. So what if I told you we're in a dip within a dip, what the dip, the dip, the dip, the dip, what the dip. 2022, the way to make money if you're doing cryptocurrencies is to short on relief rallies. Basically, that's what you do. Now, of course, there are people who like to cost average and cost average and cost average and cost average. There's many ways of cost averaging. Really depends on your time frame. But if you're seeing that it's gonna fall, or 90% chance or 80% chance that it's gonna fall, just be prepared for it then. Because nobody knows how deep is the dip, how deep is the dip, and the dip, and the dip. So buy the dip, I already bought. Buy it again, keeps deep dipping. Buy some more, I'm out of money. You'll see that happen, in my view, just my view, within the next couple of months. So, of course, because the consensus is that cryptocurrencies are going to fall, we're not saying that it's going to go zero. Obviously not. It will retain its status because of mainstream and institutional adoption. But you just have to be aware that a 20% drop in crypto could mean a lot of drops for the other altcoins. Now, notice how the growth revenue, thanks for a lot of people, and this came from Richard Chu from Twitter, so I just copied it. You can see that he's trying to see the growth versus the current price of gross profit. So he's using the sales growth and the gross profits of many high growth or well-loved names, whether it be from the software names, whether it be from just semiconductors. And let's take a look at well-known names that we love to talk about. So Shopify is still trading at about 35 times, despite growing 35 to 40%. Everyone loves Shopify. We don't hate Shopify. Nonetheless, when Shopify was trading under 1.6, it was also foreseeable that maybe it's going to fall about $1,000. So far, Shopify is trading about 1,180. I think it could rally about 1,250 or 1,3, but people would short it. So just be aware that despite all the love attributed to Toby Lutke, and everyone loves it, right? I'd say that you have to be aware that when it is about 1.3 to 1.4, people would actually short their Shopifys. Cloudflare, aka Net, has gone ballistic, right? It went from about 20 to 200 over the last 3 years, I think. Yeah. So Net Cloudflare has already deflated 50%, 200 to 100. Now, I'm not saying that Cloudflare is going to go 50, although it also can, since the market could attribute that this 40 times could deflate to about 20 times where Fastly is. Now, you could argue that either Fastly goes down further or Cloudflare just goes from 40 to about 30 or 20. So chances are, if you're asking, the downside of Fastly, if ever at 35, could probably go to $30. Whereas Cloudflare could probably fall from 120 to about 50 or 60. But everyone knows why Cloudflare is supposed to be expensive, because it's got the market share, it's got the growth, is the number one of the sector. So we will never compare that Cloudflare has to be the same price as Fastly or even Limelight or Akamai. No, we're not saying that. All we're saying is that there is a likelihood for the premium to deflate a bit. And you're seeing that already happen. You're seeing Cloudflare deflate. You're seeing Shopify possibly deflate. Everyone loves it. And I know that on the short covering rally, these would be bought tonight, probably rally for the next few days, and then get clobbered down again. So just so you know, you're just on the lookout for potential. You have two ways to make money on 2022. Either you're waiting for them to have a relief rally and then you're just waiting to pounce on them and shorten them, or you're playing all sides. You're going long, you're going short. That's fine as long as you know the trading ranges. So it's quite difficult, but it doesn't mean that you have nowhere to do or nowhere to go for this year. There's a lot. You can actually do a lot. Now, notice too that despite the fact that Roku has huge growth potential of about 30-35% every single year, Roku already deflated to about 10 times. And that's usually low already. That's why, in our view, a lot of Cathy Wood names like Roku and Square, notice Square is also there at the bottom. Roku and Square is likely already low enough that the downside is minimal. If you think that Roku can go from $190 to about $100, be my guest. I don't think that's going to happen for 2022, even if you are bearish. Now, Square is also an impossibility in my view to go back to $70. Not when you've grown your revenues and your sales and your clients and launch new products. Like, they launched their cryptocurrency trading, their stock trading. They also launched their Afterpay acquisition over the last 3 years. So there's really a ton of things that's happened with Square over the last 3 years that I believe there are some values indeed that is in this rummage bin. This is the trash bin, and this is the short arena, right? So I wouldn't even say that NVIDIA would fall dramatically. To be honest, NVIDIA is already assigned FANG status. So NVIDIA, even if it has toppish signs about $300, will it foreseeably go 150? No. It will probably, at best, you could get it about 230 or 240, and you should be happy already if it falls 20%, which could be standard practice, by the way. For the FANGs, it hasn't materially fallen, but this year, 2022, we might see the safe haven aspect of the FANGs and the semiconductors fall. So what I'm saying is that you have to be aware of the fact that there are great companies that would fall materially. You could use this. It's really a nice scatter plot. The green side here says that it's just less than 15% from its 52-week high. The yellow side is 16 to 29% from its 52-week highs. And the black side is that it's already greater than 45% downside from its all-time highs. Amongst those, the black side, you want to check if you're doing some bargain hunting for 2022 on the growth names. You want to check, number one, what's the room for upside and downside? So a lot of people are already look at these, Teladoc, Square, Roku, because they fell a lot. Where's Zoom video? Where's Zoom? Zoom is here, around 15, less than 15 times. Okay, so for SaaS names, typically Zoom would be considered still at the fair value, whereas the Squares and the Rokus and the Teladocs, even Twitter, is already really on the value side of the equation for their growth sides. SoFi is already in the value side. It's not super low like a Square. Technically speaking, if you compare SoFi and a Square, Square is already here, SoFi is still here, SE is still here. What it means is that your C limited at about 190 could still, it could still fall 150, 160 if people really want to punish C limited. Nonetheless, what you want to do with C limited is you want to trade it. To be honest, what you want to do trading. So we already know C limited is going to have some upside potential about 220, 230, and then get clobbered again. So just be mindful of the companies that you are trading or investing upon, because you've got a lot of resistances on these growth names. In general, all of these growth names, after a 20 to 30% pop, will get clobbered down yet again for another session of talks about high growth stocks, how are supposed to die, etc., etc. You'll hear all of that repeat in the next 2 months or 3 months, or whenever the market just wants to hyperventilate about growth stocks. Okay, so Unity and Roblox are still, it's still high here. Yeah. So does that mean that Unity at about $120 could foreseeably go $90 Is Roblox at $190? Could it go another 75 or $65? Well, in the short term, what we know is that if yesterday, January 6th, was a short covering bottom, we try to rally a week after, and then we rally just 10 to 20%. What that would be called is a relief rally. And then, since they are still toppish, or people would not want to pay 20 times or 25 times, that means that unless they grow massively, which will only be shown to us next quarter, that's the only time they could stay there. If they don't have great numbers in the next few months, you'll see on March a huge sell-off yet again for your Unity, Roblox, etc. So just, this chart or this picture, this scatter plot nicely shows to you which companies have lower downside and which companies have huge downside should they disappoint. It shouldn't worry you if the companies are able to grow and exceed expectations, because that's what Datadog did. That's what Snowflake actually did. The problem only with Snowflake and Datadog, or even Atlassian, is that they just are expensive. So the market would want to punish most stocks 30% down or even 70% down from their all-time highs if they don't meet the standard. So there's going to be a lot of earnings-related sell-offs yet again starting March. So you have to be prepared for that. Either some people are relief rally shorting already this January and February in preparation for that. Okay, another thing to show is, as I said, because lots of ARC names are actually oversold. You could see Teladoc, Square, Roku. They're actually already near the bottoms of their ranges. And that's like standard deviation for all the rest of the high growth names. So we could see that there's a potential this year for some ARC-related fund to actually, at the very least, not necessarily outperform, but just go back to the mean. So this is ARC versus the QQQs or the FANGs. Why am I comparing the ARC versus the FANGs? Because, ARC is usually just choosing the next FANGs. The next FANGs have done well for over about 2020 and had an epic slowdown of showdown all the way down for 2021. All its gains is back to the year 2020 ratio. So this is just a ratio. Holding ARC versus holding the QQQs, holding the NASDAQs. So if you were just holding an entire index fund portfolio of the NASDAQ, like the Microsofts and the Apples, what you've earned from these over the last 2 years would be almost the same as what you've earned with just staying part with ARC. So what does this mean? Even if you say that you've made about 20%, 50%, on your FANGs, technically speaking, you'd have done the same owning ARC if you bought ARC during here, around March, April 2020. So the question is, does ARC have more downside to go, or does NASDAQ have more outperformance to go? To answer this question, there's two ways for ARC QQQ to fall. It's either ARC falls further or QQQs go higher, right? Or ARC goes up and QQQ goes down. That's also possible. So that's something that is worth discussing, charts. And I'd say that from the fact that ARC has slowed and fallen and really deflated already for the entire 2021, chances are for 2022, well, I don't think that people will dump their Microsofts and Apples and forget about them. I don't think so. They'll probably sell their Microsofts at 330 and they'll probably buy it back 290 or 270. Basically, you've got a trading range. That's what I see. A potential downside on the FANGs will inspire a lot of buyers. And the same thing would also happen. A potential drop of ARC is not likely to fall further after a devastating drop last year. Now, take a look as well. A lot of Chinese stocks got hammered. This is a 70% drop on your internet ETF. So KWEB is the Chinese internet ETF. This is the owner of your Alibaba, your Tencent, your Baidu. Now, I don't like Meituan. So, I mean, like amongst the Chinese internet ETFs, you'll see that a lot of these are fast fast dropping, and they did, simply because Alibaba's fallen 60% down. I think your JD is down 40%. Your Pintuotuo is, I think, down from about $200 to $50, so about 75% off. In general, a lot of Chinese stocks tanked heavily because of the listing problems or framework relating to the listing. And obviously, the Chinese political hangover, irregardless on whether the company is actually earning or not, or growing or not. So we saw that epic sell-off in China. And if you're going to think about 2022, is there further downside with Chinese stocks? My view is, even if it falls 10%, you could take it already. Therefore, I am more of a contrarian long on Chinese internet ETF. I'm going long on Chinese stocks, specifically Alibaba. I'm trading JD, I'm trading some Bilibili, but those are trades. The only company that I really am like probably thinking, the downside is less than 10%, not like 50%. That would just be Alibaba. Technically speaking, JD could fall, like 40% down could be 60% or 70% down from its all-time highs if it wants to. So that means like if JD goes $70 and it wants to go 60 or 50 or $30, I would not, I'm not somebody who can tell you that, who's to say, it can happen. With China, anything is possible. Okay, so this is what I'm seeing. Qualcomm has been very resilient. All the FANGs, all the semiconductors, Qualcomm, NVIDIA, AMD, Xilinx, right? But here's what we're seeing over the last few months. Since November, when the US said that they're going to taper, faster taper, Qualcomm actually stopped going all-time highs and actually is hitting many top-ish movements here. So even if you're bullish on the FANGs or the semiconductors, what I'm seeing is that SOXL can be shorted. SOXL is the semiconductor longs that are bullish 3x. I'm sharing to short it actually at $64 to $70. And also, if you want to short a name, then you could short Qualcomm here at 185 with obvious bias to buy at about 168 below. So I'm not saying that it's a downtrend. It's just healthy pullback is normal with any asset, including semiconductors, which are treated today as savings. Now, this is not yet happening, but take a look at Google, aka Alphabet. It's already forming more like a lower high in my view. So $3,000 to $9 fell a strong move to 2,750. Everybody likes Google, but is it possible to see it fall 20% from 2.7? So 2.7, a 20% fall would be about from the peak, let's say 3,000 minus 600 is 2.4. So we'll see whether you can get somewhere at about 2.6 to 2.3. So somewhere here, I believe you'll be able to get this year your AKA beloved FANGs. So that means if your index NASDAQ at 16.5 falls 20%, 16.5 minus about 3,000 is roughly about 13.5 to 14K. We haven't seen that sell off. Therefore, that's when you say, oh, maybe that's the time when Square's $100. Or maybe that's the time when Shopify is like below $1,000. You may be right. You may be right, but it's not yet the night. Wait, maybe we have a rally. If you wish to short, go ahead. But I think you have a week to rally first before we fall further, simply because stocks just went 20% down in the last 3 days. This is our TTF. You could see this was 96. And then in 3 days' time, it fell all the way to about $82. So 96 fell to 82 in 3 days. In 3 days, I repeat. Therefore, last night, people started to cover. We would see this short cover go as high as 92. And then it goes down yet again to maybe $80. And at worst, it breaks 80 and then goes $70. So that's like the template. We already see that short here about 111, the breakdown during November. It was already teetering, right? ARK Innovation ETF was already teetering the entire 6 months. And then kabam, breakdown at 111 and then all the way down. So what we're seeing here is, yes, continuous downtrend for your growth stocks. We don't see your Squares, your Rokus, your Teledocs to hit all-time highs anytime soon. For this year, if you make a 30% rally on them, you should short them, even if we like the company's fundamentals for the long term. Simply because, well, at most, where will ARK go? probably just 100, even 110. And we know a lot of people will short it. So take a look at some names that are most beloved in the short arena. People think, oops, sorry, wait up. Resume share. People have been shorting a firm. A firm has gone from about $35, around $40, all the way to as high as nearing 200 or 5x in almost just a year. And quickly fell from about nearing 200 bucks all the way down to as much as $80 today. A firm and upstart are your high flyers that got clipped their wings. So what we know about these names is people are getting skeptical because these high flyers may not have any business model. Well, I don't think that's true though. The business model is there, but the question on a firm per se is how high would these buy now, pay later people default come credit card dues? So those are the questions that people are asking because a firm is replacing credit cards. Buy now, pay later. You buy your wedding now and then you pay later. It's installment basis. People are wondering how much would a firm end up having to carry as defaults and bad loans. So those are the questions. And that's, I think, also the question for most of the buy now, pay later firms. Firms where PayPal, they all are in the BNPL room. I'm not sure if, I think in the Philippines, GCash also wants to go to the buy now, pay later route. I do believe that people are exaggerating on the default status since a firm was not just created last night. Neither was buy now, pay later, just a business model that's created just this year. No, it's not. And with the firm's partnership with Shopify and Amazon, I think people are underestimating the fact that when people actually buy, yes, they do plan to pay it, but installment basis is a great thing given very attractive, you've got what? Low interest rates. So I think like it's really normal for people to buy a lot of things in an installment way. That's about it. So the credit card defaults of the thinking, in my view, so I'm a little bit contrarian here. I went in to buy a firm here. I was wrong because I bought at about $50. I actually sold somewhere at about $70 way before it went 200. So super tanga. Yes. Super tanga. It went gap up. I really thought it was just going to be a 50 to 75 thing. And then dire-diretso yun. Either way, I'm happy it fell down again. As to whether a firm goes 75 to 50 again this year, I'm happy to say that if it does, yeah, I just have to be prepared for it. In the short term, a firm has a strong selling pressure here about 95. I bought last night. We could see that. Maybe tonight it will retest that $75. We could see a retest. Either the people who shorted the firm will cover about 75 or 80 bucks. And the thing is, I think that they will short again at about $90 to $100. So I'm not buying it thinking that it's going to be a long-term hold. I'm buying it because that is a place where people are covering their shorts. It's a high-growth name. Upstart and a firm fell very fast in just 3 months. And I think the people who shorted them are also right to cover it already, take profits. Roblox is a metaverse play. Everyone got hyped with Roblox as a safe haven because they all wanted to play with Facebook's meta platforms, knowing that Roblox is going to be a suitable competitor for meta platforms because it's already a bona fide metaverse today. So what we're seeing here is 140 already dropped to about $90. Will it halve? From 140, will it go 70 bucks? Okay, since IPO, we already knew Roblox was expensive. Everyone also knew that Roblox is not making money. So, well, it's not making money simply because they have to pay 30% tax to Apple App Store. And they pay a lot to the developers as well. So EBITDA-wise, of course, they're making money, but they're paying it all off to a lot of people. And they're doing a lot of content creation that they have to pay them because they have lots of gamers, game developers in Roblox are paid. Okay, so these people are kind of like Shopify platform. You create your Roblox game, whether that be a Squid Game in Roblox, Roblox actually pays you. So in other words, or at the very least, Roblox gives you a commission, something like that. And it's a huge commission, something like what YouTube gives to their content creators. All I'm saying is that with the metaverse going to be a future for the world, you'll see Roblox trade in a volatile manner. From now until the next year, it will be volatile. Perhaps There's leeway for Roblox to fall $70. You have to open your mind. Maybe. And if it falls 70 below, what do you know? Well, you know that all the kids are really in Roblox, no matter what. And Facebook would love to be in Roblox. Either they have to compete with it or they want to just buy a stake on it. Of course, Facebook won't buy it. So every other fund manager will. All I have to say to you is that it's probably a huge trading range. You could see this as a huge map wherein nobody knows the actual low. And it's very difficult to say. So what I'm doing is I'm going to buy $90, sell it at $100, wait for the next dip at about $75, sell it again at $90, wait for the next dip at $60. If you don't want those buy low, sell high, buy low, sell high, buy low, sell high, then you could just see if you could really buy Roblox below $70 this year. Why below $70? Well, I don't really know how easy it is for you to buy this blockbuster IPO. It's a very rare company, very rare. You have very few metaverse plays that's in the market. A bona fide platform is very hard to find. So I think there's a premium really assigned to that, just as there's a premium for a Datadog, a premium for a Shopify, and so on. Now, C Limited, the premium has already deflated, yes, no? So I'm talking about 2022 ideas. I'm sorry, I talk long, but these are like 2022 ideas. What's going to happen with C Limited this year? All right. C Limited already went down 50% from $360 all the way to $180. So, well, the thing about C Limited is that you have to recognize around 2020, C Limited was $30. So going 12x and getting half to about 6x or $180, that's pretty norm for any growth stock. 50% sell-offs is normal. Now, the next question that you have to ask is, okay, we'll see limited here about 190, 180, fall to $90. That's the more crucial question, right? From a technicals perspective, yes, we could see a lot of selling resistance here about 220 and 230. So that means if you have C Limited, you're also prepared to sell 220 to 30. So when it rallies there, you either sell call options, you sell the shares. You can sell calls as high as 300 to 80 to 60 simply because you and I both believe C Limited is not going to break 300 anytime soon, at least within a year's time frame, right? Even if Shopee is dominating all the downloads. So the nice thing that we've seen is that Shopee e-commerce is getting valued today at about $50 billion. And then the rest, like the C-Money and then the Garena, it's not really deteriorating. They just had to change from Free Fire to Free Fire Max. So I'd say that because the market will pay a premium and let it stay, these are called mid caps. They're not like mega caps. They're not small caps either. My view is that mid cap growth stocks, which have a business model, they have the scale, and they truly have that growth runway, will have a real buyer 50 to 70% from the top. That means if you divide 50%, that's 180. A further sell-off means that 180 all the way to 100, the only way for C Limited to really fall to $100 is you have to know that within the next 2-3 quarters, that C Limited will not have any growth at all, and they would have to make huge market share losses, which I don't think is happening. So that's why I still would trade C Limited, and that's why I also own C Limited no matter what. I'd sell calls, I'll sell calls if it rallies. That's what I'll do with this name. Block, aka Square, has fallen 50%. Almost all the growth names in Cathy Wood's portfolio have fallen 50, 70, 80% names. We're just choosing the names we like. Square is a company that does payment processing, just like PayPal does. It also has that buy now, pay later. It also has crypto and stock trading. And for the Filipinos, the easiest way to understand Square is that it's like WeChat or GCash. So it's going to become the everything app. It's something that Grab wants to aspire in a way. In a way, if you think about it. And Block has already gone through the last 5 to 6 years dominating US, and they're also growing in Canada with the acquisition of Afterpay. So they bought Afterpay through cash. So that just tells you that the people who tell you that Square doesn't make money doesn't know that they do. They have gross profits. They have EBITDA. When you do payment processing, you do take a cut. So, okay, just like Square and PayPal, all I have to say here is that the exaggerated drops, in my view, could always be more exaggerated. I'm not saying that, oh, this is the actual low. But what I know is that 140 can rally to 160, whether it goes to about $100 or retest 140 or 120 or make a new low, that's up for the next 3 months to decide. Okay? So I'm just showing to you that the charts are still negative, just like how ARC stocks are negative. But if you can see 82 rally to about 92 before really heading south, then that means these stocks would rally first before getting clobbered down yet again. And I think if they do get clobbered down, do I see a 50% downside? Let me just be realistic here. 20% downside is likely gonna be the only downside for these names, only because their growth isn't exactly dying down. There's very few names that can actually grow triple digits over the last 5 years. And these are the companies that managed to do that. Okay, what we saw last night with Matterport is a case of short covering. After falling from 36 all the way to 16, this is a sign of short covering in the air. It doesn't mean that I am bullish on Matterport. What it only means is that from 16, it rallies about 20 before it goes down to about 14 or 12 or 10. That's about it. Most packs, we actually see them going down to as low as $5 or $6. So obviously, Matterport is not a below $10 name simply because virtual reality is aptly being for by real estate, because Matterport is a virtual reality niche for real estate. Then again, all SPACs just hit $5, $6. So no matter how high your growth runway is, a lot of people would be skeptic on remaining steady here at about $10 or $15. So we'll see. Okay, so Matterport, let's see. But first things first, the reason why I think there's a short covering, we saw the first green arrow last night. And this is what happened before. First green arrow at about 21, rally to 24. That's about $3 or around 15 to 20%. So around 15 to 20%, if you wish to short Matterport, you're waiting at about $20. So let's see if Matterport hits $20 for you to short it yet again. Palantir, all right. Palantir just had a hookup with Hyundai Motors Industries, realized that they need a software platform, and they chose Palantir. So far, what's really true is that most of the industries, they said 40 verticals. That means almost any sector from healthcare to retail to cars to aviation, they've all been using Palantir. And that's the reason why Palantir has also had a very sky-high premium valuation, as people noted. The thing about them is that these are blockbuster IPOs since 2019, 2020, 2020. Yeah, so Palantir was a 2020 direct listing. So it wasn't an IPO, it was a direct listing at about $9. Yeah, we purchased the direct listing. And all I could say is that most of these companies, because they had a tremendous growth, you could see that this time, the reason why it rallied here from about 18 all the way to 27 was because it really had good growth, good earnings. Now, these times, actually very good earnings, but people were just skeptical to pay 27, right? So what we already know is that people won't pay any price above 27 for Palantir. For maybe around 1 to 2 years, people will never pay higher than 27 for Palantir. Now, is it possible for Palantir to go to $10 or $9, the direct listing price? I am not psychic to tell you that Palantir will definitively go to $9 this year. I'm not sure. Would the macro reason be enough to really make Palantir slow down to $9 if they are the ones who helped us find COVID vaccine? They helped a lot of healthcare names. You know, the industries that Palantir is really reaching is even going through crypto and cybersecurity names. That's how vast Palantir ecosystem is. So I wouldn't say no to paying a higher valuation to Palantir simply because they are like the only ones that can do what they're doing. So when you have a moat like that, I'm not that, I'm not barat. Let's just say that. I'm not gonna get you low. I know that. That's why I'm willing to pay you high. Because I also know everyone can see your premium valuation is worth it. You know, even if you were buying Tesla around 5 years ago, you've always had to pay a premium. You always had to, because you knew that if it's gonna be a world-class leader, you'd have to pay high. There's no such thing as I want to pay low. Very rare. It's one of those rare cases that you could actually pay low and get high growth like what Alibaba presents today. I mean, unless you foresee that US is going to follow the Chinese Communist Party, then you can think of those types of valuation discounts. But so far, I don't think like US is going to be like Chinese discounted 70, 80, 90% ways. So yun, like for Palantir, what we do know is, okay, it has a support maybe at 16, probably has a ton of resistance at 20, and almost impossible to rally to 27. So Alex Karp is a great CEO, Shyam Dankar is a great CTO, but then again, we have to understand the charts are the charts. So yun lang yun. I mean, I still like Palantir. One day it's gonna grow 28 and break that, but this is not the year for it to break 28. I've also been noticing these high growth names, which are the vaccine beneficiaries, have started to slow down. Yes, they fell 320 all the way to 120. Let's see if this is support. Why am I seeing that $120 is support? I think that Novavax will rally to 160 and then get shorted and clobbered down. So I just think that after dropping from 240 to 120, or a 50% sell-off in just a quick pace, just like what happened to Upstart Affirm, I just chose the names that had a quick fall, high flyers that had a quick fall, cover, and then short again after a 20 to 30% rebound. That's the playbook there. And the reason why I think 120 got supported was not just because, well, Novavax is still giving their vaccine for the next 3 months. You've got COVID spiking, the variants are spiking everywhere, and EU and Japan approved Novavax trials. So yes, I do think that they'll get that support. Supported here, 1, 2, 3, 4. How am I to know that the fourth time is not the charm? So I think like the fourth time is still the charm. So it's support, get resistance here to 160, and then we'll take a look again. Moderna CEO is also saying that everyone is required to do booster shots. So yes, this is another name that went more than 50x, I think. What was this around March? Was it like $10 or $20? Okay, so it went as high as 500, deflated all the way to 200. Why are we looking at the 200 area? Around June, July, if you recall, the Delta variant happened, which made people realize that they have to have more booster shots of Moderna. And nowadays, we've got Omicron variant, and then the next 6 months, we also have more variants that I would not know how to call them. The thing is, what the market believes upon is Omicron or no Omicron, they'll have to have booster shots. And if people think that there will be recurring booster shots, you will see perhaps Moderna rally first about 260 before dying down. Now, it's a question. Is there going to be recurring booster shots every year that will sustain this valuation for Moderna? Is it going to be treated like Microsoft recurring revenue? We always have to order from Moderna. Is it just a COVID beneficiary? If you think it's just a COVID beneficiary, you should be shorting about 260. If you think that it is not a one-time boom, but actually a real business that would have not just Moderna COVID vaccine shots, but actually more shots. Actually, Moderna shared that they have research and development that they've earned from COVID towards other entities. I forgot. Was it cures for? Was it hepatitis? I forgot. But Moderna was sharing, I think, that they have so much money earned from the COVID vaccine that they ended up doing more booster shots for every other disease. So that's it. I just showed you the charts because the charts are really showing cover first and then rally and then sell off again. RTTF is a trading range. So here you got that dragon tail, or what you call a capitulation short-term bottom. It rallies again and then falls again. And we are seeing that people are actually interchanging their viewpoints with ARK and SARK. They either buy ARC or sell ARC or buy SARC and sell SARC. You can do two things. So far, we're seeing that SARC would have a tradable range 36 to 42. Even if let's say ARC ETF goes further down, that means that your SARC will go 45. So either you're looking at 35 to 45 range, any dips of SARC you want to be buying, any rallies you also want to be selling. I think it's a trading range more than a parabolic forever and ever rise of SARC or the parabolic demise go to zero of growth stocks. That's just my view. Now, also, I want to share to you that we are seeing some Chinese names clobbered 90%. So I just wanted to see that the clobbered 90% are actually in a sleeping giant. Well, it's not a sleeping giant. It's more like, it's, Rapunzel, Sleeping Beauty. They just sleep for about 1 year or 2 years, and that 1 year could be considered a range. Though you, I expect, is just trading in a range, $2 when it got delisted or the delisting rumors. So though you fell from about $20 to $2, 90% down, trading below cash, you're cashed about $3 per share. Though you is still a Twitch of China, no matter what you think. Though you and Huya, they're still doing live streaming. There's still esports. Unless you think esports is continually going to go down to zero, then you should think that Douyu is not going to go to zero. So I think that the bearish extreme has already transpired for Douyu. It has insider buyback of $100 million. All I have to say is that the downside is minimal and we can see a clear trading range here. If $2.20 is getting supported, 2 and 220 is supported, 270 is your first resistance, and then you get the jackpot somewhere about next 2 years when maybe the Chinese hangover is over. I don't know when that would be, but by then it should go about $4 above. So it's something to keep in mind. This is Douyu today. Yes, it's 90% down from its peak. There's no Huya Douyu merger. Tencent will not be able to do it because China said you couldn't do monopolies. Douyu, Huya, and Billy are against each other in the live streaming department. One catalyst right now happening is that Douyu, Huya, and Billy is getting WeChat as there's news about this just today. WeChat. Wait, let me share that news. Wait up. What was the news? There's news today on Douyu and Bilibili. Wait up. So, yeah, it's trying to break out. Indeed. So a lot of people are seeing the short squeeze happening. There's news as well. Here. WeChat channels is now launching to paid live streaming studio services. It's aware that live streaming is a trend. It's not YouTubing. It's not something that only non-Chinese people can do. Everyone can do it. So in China specifically, they also love to do live streaming. And if you believe live streaming has a huge audience, and we're talking about 1 billion users of audience, then you are like me, who's a little bit degenerate, that would buy a company that is here, Douyu, sleeping silently around $2.45. Well, you can try to bid $2.20 if you wish. And I just wanted to share as well this Yatsen Group, $100 million of buyback, 93% down, a casualty of this Chinese hangover sell-off. To me, you can't buy education stocks in China, but could you buy a makeup company? Yes, especially if it's actually selling $1 billion of sales as well. So this is not some exotic company. It's just a retail company that is selling through e-commerce lines. So Yatsen is a direct-to-consumer. You can think of Estee Lauder, Coty of China. They call it that. So yun, it's just that they just buy, they manufacture makeup and then they just sell it online. Their channels or their brands are Perfect Diary, Abby, and another thing. But really, Perfect Diary is their flagship brand. What I could share here is that you're about $1.80, seems to get a support, but very little resistance, very small resistance, you're about 220. So far, 20% range. We'll see whether the market will just accumulate Yatsen at about $2 below. And for now, maybe I think the market will just accumulate, just like the insiders are also buying the shares. The cash per share of Yatsen is $1. Just in case you wanted to wonder, is it below cash? No. Yatsen is trading $1.80. It has $1 cash. Unlike DouYu, that is actually trading below cash. The DouYu is $750 million today, but it actually has $1 billion of cash on hand. Yeah, so let me just show to you high flyers getting killed. Cloudflare gets killed. Everyone likes the edge compute. I am a believer of edge computing. All of your Discord and Amazon will die without Cloudflare. Don't your Shopify website will just die without Cloudflare. Okay, so what we're just seeing here is a deflation on the valuation. So 200 falls about $100. Will it rally? Yeah, I think it rallies about 100 to 130 and then falls down from 130 all the way to 65. So I'm not sure if it will even fall 65, but I have to be concerned about the valuations. That said, because of tremendous good earnings, you might get a surprise come February. Cloudflare could be one of those names wherein the earnings actually is good and it will prove it somewhere here. So we'll see how things go. Either it rallies and then consolidates here, and then either it goes up again because of earnings. You have to watch for earnings for Cloudflare. Yeah, so Affirm is also a company that you will have to watch for earnings around February to March. Alibaba's already gone up. We're seeing that the market is willing to buy it up. Before earnings, let Alibaba rally to 140, probably sell somewhere here, and then before earnings, you want to exit. Although I think, Alibaba is probably going to have good numbers. Up to you whether you want to exit before earnings or just hold. So those are my views for 2022. I'll just answer some questions. Can SE realistically go below 170? We have to wait for earnings by March, I think, for C Limited. Should you hold all the EV shorts? I am bearish on Rivian and Lucid. All of the electric vehicles, I'm talking about Neo, Xpeng, Li. But I think that because there's short covering in the air, it really depends on you. I personally covered my shorts and I'll just reinstate it again maybe next week. Now, of course, the downside is what if it doesn't make a relief rally and you could not reinstate your shorts? That's the risk. So, if you just want to hold all your Lucid shorts or Rivian shorts, it's fine. But I think that last night, people were covering their Rivian at about 75 to 87, and they were covering their shorts on Lucid about 33 to 36. So, yeah. Okay, that's it. Thank you very much, guys, and see you again next week. Let's see whether the relief rally happens, either for us to close our longs, our relief bounce longs, and then reinstate shorts. Let's see. Okay, that's it. Bye-bye.